If there's one thing that's become really clear as we approach the deadline for the first sign-up period for the Affordable Care Act, it's that people don't really understand how insurance works. There seems to be this misconception that if you pay an insurance premium or if your employer pays the insurance premium for you, that your every healthcare need is covered. And that's simply not the case. I mean, if you look at the purpose of insurance, it is for the person who's purchasing the insurance to insure against the likelihood of a major catastrophe. Think of a car accident as being a perfect example of this. You drive your car, you pay car insurance, and if you had enough money, you wouldn't actually need car insurance because in the event that you caused an accident, you could pay for all the medical bills of the other people involved in the accident, and you could pay to replace your car and their car and all of the other things that get involved in the accident. But the reality is most of us can't afford to do that, and so we buy insurance to insure against that risk of accident. We pay the premium, and the insurance company assumes the risk that enough people will pay for insurance and not file claims that it all balances out, and as a business they can still turn a profit. Same is true for healthcare. The healthcare insurance companies are pooling risk, and they are accepting a lower amount of money for the actual services that people might need from healthcare providers, with the idea being that the pooled risk, that a smaller subset of the people will actually need to use the healthcare services that the insurance company is insuring against. And just like my example of auto insurance, in an ideal scenario, we would all have enough money that we could pay for all of the healthcare events that we might incur. And for some of them, we probably can pay for them and could get away with not having insurance. For instance, if you just need to go in for a very simple checkup to see if you need an antibiotic for some kind of infection, you could probably pay out of pocket for that and never need insurance because it would be maybe, a couple times a year and a total of a few $100s for the course of the year. But the reality is there are medical events that happen that we couldn't possibly know that are going to happen, say getting cancer, for instance. That gets pretty expensive, and it's not something that most of us would have enough cash on hand to cover. And so you're paying into the system with the idea that at some point in the future you might actually need to have a major medical event covered, and at that point the value of the insurance actually kicks in. But for the day-to-day stuff, it's really not covering everything. Although preventative care, certainly the idea that you go in and you get certain preventative things done with the idea that your body will stay healthy longer and therefore cost the insurance company less money over the long haul, is something that the insurance companies have factored in. But insurance by itself isn't designed to pay for every expense that you might incur. There still are the additional expenses that go above and beyond what the insurance is covering. Really, the insurance is intended to cover catastrophic or significantly large events, not all the little stuff.